Hello everyone, welcome to this week's market analysis video with me, Frankie, your market analyst at Markets4U. Today, I'll cover key data and which pairs to watch from June 3rd to June 7th, 2024, Monday through Friday. As you can see, I've already shared my screen. I'm using the economic calendar from the traders room at Markets4U. I've set the dates from June 3rd to June 7th, covering Monday to Friday. Just a reminder, I'm using GMT, so please adjust to your respective time zone. Now, let's go over this week's market events. On Monday, we will have the US ISM Manufacturing PMI. On Tuesday, we will have US factory orders. On Wednesday, we'll see GDP data from Australia and PPI data from the Eurozone. The US ADP employment change will also be released, along with the Bank of Canada's interest rate announcement, which is forecasted to be 4.75%, down from the previous 5%. Additionally, we'll have the ISM Services PMI for the US. On Thursday, we'll have balance of trade data from Australia, retail sales from the Eurozone, and the ECB interest rate decision, which is forecasted to be cut by 0.25 basis points to 4.25% from 4.5%. We will also have weekly US unemployment claims, balance of trade data from Canada, an ECB press conference, and the IV PMI from Canada. On Friday, as usual, we'll have employment data from Canada, including employment change and unemployment rate. We'll also have employment data from the US, with the main event being the non-farm payrolls, forecasted at 151K compared to the previous 175K, along with the unemployment rate, which is forecasted to remain unchanged at 3.9%. Additionally, the ECB President Lagarde will speak. For this week, the key events to watch are the Bank of Canada interest rate decision, the ECB interest rate decision, and the non-farm payroll and unemployment rate data from the US. Now, let's move to the charts for this week. Okay, now let's move to the technical analysis. Today, I'm going to discuss three pairs: US dollar to Canadian dollar, euro to US dollar, and gold. As we have significant events like the Bank of Canada rate decision, the ECB rate decision, and the non-farm payroll report. Let's start with the US dollar to Canadian dollar for this week's chart analysis. I've already opened the US dollar to Canadian dollar pair on the weekly chart. You can see that the price is near the 20-period moving average at 1.3600, or around 1.3598. The stochastic is moving lower but is trying to cross back higher just above the oversold area. The 20-period moving average is a strong support on the weekly chart, so we might see the price get rejected here. However, with the Bank of Canada expected to cut interest rates, the Canadian dollar might weaken, causing US dollar to Canadian dollar to move higher, following the stochastic's upward cross. Switching to the daily chart, the 20-period moving average on the weekly chart is at 1.3600, which aligns with the current support level. My first support level is around 1.3600 to 1.3587. And my second support is at 1.3525. The stochastic is moving lower, approaching the oversold area, so the price might test these support levels. On the higher side, the first resistance is at 1.3736, and the second resistance is at 1.3825. I expect US dollar to Canadian dollar to move lower initially before rebounding higher. Now, let's move to the euro to US dollar chart. The price is above the 20-period moving average on the 4-hour, daily, and weekly charts, indicating a bullish trend. The stochastic is also moving higher, approaching the overbought area. On the daily chart, the stochastic is also moving higher in the middle, creating potential for a higher movement in the pair. Meanwhile, I have drawn support at 1.08 as my first support and 1.0743 as my second support, and resistance at 1.0883 and 1.0950. Euro to US dollar might consolidate within this range before breaking out, depending on the ECB rate decision. If the ECB cuts rates, the price might move lower. However, hawkish comments from Lagarde could push it higher, potentially breaking resistance levels. Finally, let's look at the gold chart. On the weekly chart, Gold reached an all-time high of 2,452 weeks ago and has since moved lower, forming a bearish engulfing pattern. The stochastic is moving lower towards the oversold area, indicating further bearish potential. The price is still above the 20-period moving average on the weekly chart, allowing room for more bearish movement. On the daily chart, gold is already below the 20-period moving average and the stochastic is moving near the oversold area, suggesting further consolidation until we see more movement when the non-farm data is released on Friday. I've identified the first support at 22.81 and the second support at 22.33. The first resistance is at 23.96, and the second resistance is at 24.50, the all-time high. I expect gold to move lower, testing the support levels before bouncing back. Given the upcoming non-farm payroll data, we might see significant movement, but the general trend for this week appears bearish. So that's it for today. Have a great week, and see you in the next video.